All right, good morning. We'll call our June 27, 2024 meeting to order. This public meeting of the Philadelphia Board of Pensions and Retirement is being conducted in person in the board's conference room at the board's offices on the 16th floor of 210 Central. Pursuant to section 21-1503 Philadelphia Code, electronic recordings of this meeting will be made available through Microsoft Teams conference technology and by an audio recording. An electronic recording will be made available to the public online on the board's website without charge within 10 days. Please note that you consent to such recording by attending, participating, or speaking at the meeting. Our first order of business is to approve a motion to adopt the rules of order that the board has used for our in-person public meetings that are electronically recorded. The purpose is to help ensure that accurate and complete audio and audiovisual recordings of the meeting occur to comply with the code requirements. Item 1 is the motion to adopt our procedures for today's meetings. It's been made and seconded. Discussion. Now we'll go to the roll. Brian.
Approved.
Marcia. Approved. Madeline. Approved. Paul.
Approved.
Andrea. Approved. Willie.
Approved.
Sharon. Approved. And Carol.
Approved.
Motion carries unanimously.
Right.
Item 2, the motion to approve our minutes from the May 30th meeting was made and properly seconded. Any discussion? Hearing none, we'll go to the roll. Brian. Marcia. Sherlyn. Approved. Paul.
Approved.
Andrea. Approved. Willie.
Approved.
Sarah. And Carol.
Approved.
Motion carries.
For the record, motion to abstain on first reading.
Oh, yeah, right, I forgot, yeah. I wasn't here.
For the procedures,
Oh, no, I'm good for the
Yeah.
procedure.
you abstained on the right one.
Okay.
The motion is approved 7-0 and 1 abstention no. Item 3, consideration of 117 pension applications and 59 withdrawal applications was made and properly seconded. Any discussion? Hearing none. Brian.
Approved.
Marcia.
Approved.
Berlin. Approved. Paul.
Approved.
Andrea. Willie.
Approved.
Sarah. And Carol.
Approved.
Motion carries unanimously. Moves us into section 4 and case 4A. A motion to approve the service-connected disability benefits for Phil Brooks was made and properly seconded. Any discussion on 4A? Hearing none. Brian.
Approved.
Marcia.
Approved.
Carolyn. Approved. Paul.
Approved.
Andrea. Billy.
Approved.
Sarah.
Approved.
Carol. 4A.
I said approved.
I can get to you.
Oh, I thought you'd take care of it.
I just did.
Well, I'm having a bad day.
It's okay.
Two for two. I just
You got this, Carol. You got this. All right, case 4B, motion to approve the service connected disability benefits for Joanne Franklin was made and properly seconded. Any discussion on 4B? Hearing none. Brian.
Approved.
Marcia.
Approved.
Sherlyn. Approved. Paul. Andrea. Approved. Lily.
Approved.
Sarah. And Carol.
Oh, Sarah and Carol.
Three strikes. Three strikes.
That wasn't. Yeah, absolutely. Yeah, I was walked out.
You're still in the game, Carol. Motion carries unanimously. 4C, motion to approve service-connected disability benefits for Dennis Perry was made and properly seconded. Any discussion? Brian. Marcia.
Denied.
Sherlyn. Denied. Paul.
Abstain.
Andrea. Denied. Lily.
Abstain.
Sarah. And Karen.
Abstain.
The motion fails 0-3 with 5 abstentions noted. 4D, a motion to approve the service connected disability for Nicole Francis made and properly seconded. Any discussion on 4D? Hearing none. Brian. Marcia.
Denied.
Sherlyn. Denied. Paul.
Abstain.
With Andrea. Denied. Willie.
Abstain.
Sarah. And Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4E, a motion to approve the service connected disability benefits for Roberto Quintana was made and properly seconded and discussed on case 4E. Hearing none, Brian,
I approve.
Marshall,
Approve.
Sherilyn, approved. Paul,
Approve.
Andrea, approved. Willie,
Approve.
Sarah, approved. Carol,
Approve.
motion carries unanimously. 4F, a motion to approve the service connected disability benefits for Constance Witherspoon is made and properly seconded. Any discussion on this case? Hearing none, Brian,
Approve.
Marshall,
Approve.
Sherilyn, approved. Paul,
Approve.
Andrea, approved. Willie,
Approve.
Sarah, approved. And Carol.
Approve.
Motion carries unanimously. 4G, the motion to approve the service connected disability benefits for Thomas Lowell is made and properly seconded. Any for discussion on 4G? Brian,
Approve.
Marshall,
Deny.
Sherilyn, deny. Paul,
Abstain.
Andrew, deny. Willie,
Abstain.
Sarah, and Carol.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4H, a motion to approve the service connected disability benefits for Amanda Malone is made and properly seconded. Any discussion on 4H? Hearing none, Brian,
Approve.
Marcia,
Deny.
Carolyn, deny. Paul,
Abstain.
Andrea, deny. Willie, Sarah, abstain.
Abstain.
Motion fails 0-3 with 5 abstentions. Case 4I, a motion to approve the service connected disability benefits for Constance Matthew is made and properly seconded. Any discussion on 4I? Hearing none, Brian, Marshall,
Approved.
Sherilyn, deny. Paul,
Approved.
Andrea, approved. Willie,
Approved.
Sarah, and Carol.
Approved.
Motion carries 6-1 with 1 abstention. For J, a motion to approve the service connected disability benefits for Richard Cole was made and properly seconded. Any discussion on the case for J? Sorry,
That's what I'm trying to be.
the last one was Cox and Matthew. Any discussion on case for J, before I do the roll? Hearing none, Brian,
Approve.
Marcia,
Deny.
Sherilyn, deny. Paul,
Approved.
Adrian, approved. Willie,
Approved.
Sarah. This is J, yeah,
Approved.
and Carol.
Approved.
Motion carries 6-2. For K, a motion to approve the service connected disability benefits for Raymond Sullivan was made and properly seconded. Any discussion on 4K? Hearing none, Brian, Marcia,
Deny.
Sherilyn, deny. Paul,
Abstain.
Andrea, deny. Willie,
Abstain.
Sarah, same. And Carol. The motion fails 0-3 with 5 abstentions noted. For L, motion to approve the service connected disability benefits for Darius King was made and properly seconded. Any discussion? Hearing none, Brian, Marcia,
Deny.
Carolyn, deny. Paul,
Abstain.
Andrea, Willie,
Abstain.
Sarah, same. Carol.
Approved.
Motion fails 0-3 with 5 abstentions. That moves us into section 5. Yes. I'm sorry. Yes, I recognize Terry.
Thank you. I think I have seen residents that put it on or, that was the time.
Matthew Jackson.
Okay, so you'd like to reflect your vote changing to approved.
Apologize.
Okay.
I think you-
So we'll note,
Maybe I was-
okay,
I wanted to-
no, that's okay. So we'll note that for 4I, the final count was 7-1. Okay, we'll go back to 5A. The motion to approve an application for service connected death benefits regarding Juan Velasquez was made and properly seconded. Is there any discussion on case 5A? Hearing none. Brian,
I was
Marcia,
denied.
Sterling, did I? Paul,
Approved.
Andrea, Lily, Sarah, same. And Carol.
Approved.
The vote was 4-3 with one abstention. As chair, I will vote to deny, and so the case fails for one abstention. Subsection full business, section 6, case 6A, a motion to approve the service connected death benefits for John. Today, radio and properly seconded. Any discussion on case 6A? Hearing none. Brian,
Approved.
Marcia,
Denied.
Sherilyn, and I. Paul,
Approved.
Andrea, approved. Willie,
Approved.
Sarah, same. And Carol.
Approved.
Motion carries 5-2, one abstention. Case 6B, just want to note for the record that we're tabling until the July meeting, so that will come next month. That moves us to case 6C. A motion to approve the service connected death benefits for Kathleen Solon was made and properly seconded. Any discussion on case 6?
I said, hearing and I said in my decision, it should have been denied, but I couldn't really want it. So it's a no.
Thank you for that commentary. Any other discussion on 6C? Hearing none, we'll go to the vote. Brian,
Denied.
Marcia,
Denied.
Sherilyn, denied. Paul,
Denied.
Andrea, denied. Willie, Sarah, denied. And Carol.
Approved.
The motion fails 1-7. That moves us to case 6B. Motion to approve the service connected death benefits for Kenneth Presley was made and properly seconded. Any discussion on 6D? Hearing none. Brian,
Approved.
Marcia,
Denied.
Sherilyn, denied. Paul,
Abstain.
Andrea, denied. Willie, I'm sorry, you're on 6B. Tara and Carol. Motion fails 0-3 with 5 abstentions. That moves us to new business and the executive director.
State audit reimbursement is complete, so that's fine. That's right. See, in the fall, Josh is planning a seminar in the fall. A refresher on fiduciary duty, especially for the newer board members. And we also include a summary of the board's exercise of proxy management in various things. So we'll do a refresher for the board and then Josh will send the possible dates out soon. Just a reminder on beneficiary forms, we see various things happen with beneficiary forms. Sometimes new employees, they're not hired, they don't have someone else, they put that on their parents. When life situation changes, maybe they don't update their forms, maybe they don't update their forms, maybe they don't sign their forms. Various things can happen with beneficiary forms. Just a reminder that employees ask you, they change their forms usually through their HR department. I mean, they can always send it to us, they can change it to the unions. There's various ways where people have forms and make them available to employees where they can change it. Just, always a reminder, we should keep their forms updated, make sure they're all signed and dated. Without being signed, obviously, we're dated, especially dated. We don't know we can have an old form, and then we have an undated form that one can newer, but it's not dated, we all know that, so always important that they take do all that, just periodically they mention that. That's what we want. And the law department, we're working with the law department on the contract for the new medical provider, so as soon as that's done, they will be in full part of the rotation. That's it. So,
The other new business. The litigation summary is in your packets. Ellen, anything, no, if you want to add anything? No. That's good. The motion to adjourn is made and properly seconded, and we will move into the deferred compensation for the assets.
Oh, yes, thank you.
Sorry. It did sound like I'll say that.
That was like. All right, good morning. Our first item, deferred comp is to approve our ending minutes. Motion was made and properly seconded. Any discussion? Hearing none, I'll roll. Brian. Thank you. Marcia. Abstain. Carolyn. Approved. Paul.
Approved.
Andrea. Approved. Willie. Sarah. And Carol. Motion carries 7-0 with one abstention and moves us into the plan update.
Good morning, everyone. Good morning.
Morning.
As of May 31st, the deferred compensation plan ending balance was $1,951,268,039. That's 2.7% increase from the month of April. In terms of participants that have an account balance, this includes your active, inactive, as well as those that have terminated employment but have decided to keep their assets within the plan. There's 25,917 participants, which is 67 more than previous month. Actively deferring is 19,896. That's 19 more than the month of April. New enrollments continue to increase. There was 155 new enrollments received in May. Brad will talk more about the details of that. But year to date, we had 941 new enrollments, which is 9% increase over last year around this time. Inactive participants was 6,021. There was 48 new participants in inactive category. In terms of participation in the Philadelphia Parking Authority, 631 participants continue to keep their accounts there. No new enrollments for the month of May. Philadelphia Housing Development Corporation, 43 participants, with 1 new enrollment in the month of May. Regarding the 401(a) plan, at the end of May, the ending balance was $3,511,952. That is 3% increase over the month of April, with 1,133 participants. That's 2 more than previous. Regarding the call volume, it did decrease in May. The call volume was 3,117. The decrease was around 376 less calls from the month of April. It's normal when you come off of the quarterly statement period to see these kinds of decreases. Online account, it is wonderful to see that participants continue to set up their online account. We are now at 20,274 participants. That's 123 more than the month of April and 78% penetration rate. Regarding the percentage option, at the end of May, there were 2,321 participants. That's an increase of 45 more participants than the month of April. And the after-tax contribution, which is the fraud, there are now 7,404 participants, an increase of 162 participants since April at $68.3 million. Any question, happy to answer any questions you may have for me. If not, I'm going to pass it on to Brad to discuss the service activity. Any questions?
Thank you.
Thank you.
Hey, good morning, everyone. For the month of May, the local service team conducted 324 one-on-one meetings with participants, resulting in 101 of those participants signing up for the plan. 32 of those one-on-one consultations were conducted using the My Interactive Retirement Planning tool. And for the month of May, there were 31 group events or workshops with 815 total attendees for the month. Thank you.
Any questions? Your sentence says that item for base.
Thanks. Good morning. This is a continuation of a discussion that was started last month regarding the Mass Mutual Mid-Cap Note Fund as part of the first top lineup. As you'll see in the staff report, staff ran screens for Russell Mid-Cap Growth Funds with at least 100 million in product assets, minimum 5-year track record for the end of the quarter. And we also highlighted the expense ratio and reasonable or tight tracking error to the index. After running those screens, 3 possible alternatives filtered up to the top. You'll see in staff's estimation, none of them are particularly appealing. All have, we'll call it middling to core peer rankings. All over most or all time periods have underperformed their index. And with that in mind, we're recommending the following. We received a list of 80 total funds from Nationwide in this category that are available on your platform. Folks, Kristen, Kai, and others have already started looking at them in detail, one at a time, as opposed to just running broad screens. In addition, we're looking at more of what I'll call a holistic option, rather than having a growth and a value option along the index, we just have a core option. So they didn't have a tilt either way. Put aside the index option. We note, and obviously would require discussion and review of the board, that would require, in our opinion, also the elimination of the second fund, because otherwise you have just a value option. With all that in mind, and given the, as I said, the challenged performance of the candidates that filtered up to the top, we'd like to make that additional research and recommendation that people take any questions.
So your research show was the impact of removing MFS from the fund as opposed to keeping it and then just doing the
Yeah, the research would show what options that and we're not saying that that's the correct option.
Right.
But we're not sure. I mean, that's what we want to present to the research and see if a more holistic option makes sense, but we're not at a point today where we want to take the
That makes sense to all the trustees to wait until July and look at this. Any other questions on the bird comp? Hearing that, motion to adjourn is made and properly seconded, and we will move into investments. Mr. Bowden, and
Madam Chair,
you leave it there. Okay, we'll take a 5-minute break.
personal one.
I'd like to call the committee into session. Item is approval of minutes from May 24th. We moved to probably second the minutes approved. Over Francois. Approved. Anyway. Paul. Approved. Brian. Approved. Lloyd. Approved. Carol.
Approved.
Martin. Karen. Minutes are approved, thank you all very much. And that takes it to this, annual Carol will talk to.
Thanks, Rob. Just real briefly before the folks from Seagull Marine and their team come in. This is the annual update on board shareholder and proxy activity. Includes a recap of actions the board took last year, as well as forward looking topics and possibilities for the board next year. Maureen's prepared to, we got a question ahead of time on trends in political contributions and disclosures, so Maureen's prepared to address that. And then the other thing is, you'll see in the very back of the presentation, that there's at a high level recommendations for updates to the proxy policy. I talked with a few of you and staff has asked Maureen, she'll be, we'll probably get it as soon as next week for a red line of what the policy would look like if this was changed exactly as recommended. And we've had some preliminary discussions about perhaps it makes sense for the board to have a discussion about those changes or anything that's they'd like to see in the subcommittee. Then it could come back to the full board in July or some rare times. So with that, happy to take questions. Otherwise, we'll get more.
And I'm going to stay in the. Okay. I think we can get you there. Right. So, there we go. Thank you, Brian. For, yeah. We missed it. Yeah. Everything's great.
Should we take it away?
Please do.
Okay, so, hello, everyone. I've seen some of you in the past, some of you are seeing this. Maureen O'Brien, Senior Vice President, Seagull Marine Advisors. We vote the proxies for all your stuff that we held equity. And we also do a lot of engagement work with companies on ESG issues. I'm joined today by Max Stolberger, who I'm very happy is now part of our team. He's actually worked for the Illinois Treasury as a client, so we worked together on engagement a lot. And then we brought him on about a year and a half ago. Yeah, so today we're going to take a little bit of time and go through your voting for 2023 and then your engagement work for 2023, also for 2024, given that we're halfway through the year already. And we have a couple of regulatory updates and policy recommendations. So if we start on page 4 of the materials. So you are a public fund, you're not regulated by the DOL. The DOL regulates retirement funds that are regulated under RISA. But we do monitor what's happening there because that is a good indicator of how the laws are going for public pension funds. There's been a lot of back and forth from the DOL on proxy voting and ESG investing generally. Where we're at now, there's the most recent rule was issued in 2022, and it says that ESG is appropriate to consider for investing. You're not required to do it, but you're allowed to do it. Also, it reinstates the long-held belief that proxy votes are plan assets. Because they're plan assets, you have a duty to monitor how they're being voted. One new piece of that rule is that investment managers that sponsor commingled funds, where instead of owning the stock outright, you own a strategy that owns the individual stocks. Those voting rights used to rest exclusively with the investment manager. But now those investment managers have to check in with clients on how they want to vote. So you may have been seeing some proxy policies coming away from any commingled investments. They're asking clients to sign off on their proxy voting policies. A couple of managers are giving you proxy voting rights if you want to vote them yourself or select from a couple of different policies.
Great. The next slide on the SEC. I want to just give an update on the climate disclosure rule, which folks may have heard of. This has been received a lot of attention in the news. They issued a rule basically mandating that issuers will disclose their climate-related risk, their greenhouse gas emissions. There's a lot of different provisions there. This was originally introduced in March of 2022, and the rule was just adopted this March, 2024. It received 24,000 comments. So there was a lot of input from various different investors and stakeholder groups. So just a quick summary of what this does. So yeah, to my earlier point, companies will disclose how they are governing any climate-related risks. They will talk about the potential material impact of any of those climate-related risks, and they will talk about their strategy to manage those issues. So, there's a lot of companies that are facing obviously physical risks from severe weather events and such, as well as transition risks, as various different industries are undergoing major transformations as the marketplace changes, as regulations evolved, as consumer preferences evolve, et cetera. So this rule, was adopted. There are some lawsuits from business groups that are challenging the law, and their main argument is that the SEC is going beyond its authority, essentially, to require these kinds of disclosures. So those lawsuits are ongoing. There was a lawsuit, actually, at the time we put this together, the Sierra Club had an active suit that they recently dropped. This was just dropped a couple of weeks ago. They were arguing essentially that the SEC was not going far enough, essentially. And so, but this was just recently dropped, so that's no longer in play. But the main takeaway here is that this is coming. There's also laws in California that are mandating disclosure. If you're a company that does business in California, that's very loosely defined. There's going to be disclosure requirements related to climate. In Europe, there are various different climate-related disclosure rules that are going forth. So companies are preparing to disclose their emissions, what risks they're exposed to as the whole environment changes, and as the regulatory environment changes and such. So this is something that companies are actively preparing for. And so investors are following what the disclosure will look like in the future.
Okay, so that's it for regulatory updates, and we can give you a little bit of an update on engagement.
Great. So first, I want to talk about some of the diversity, equity, and inclusion work that we participate in, and that's through your membership in the 30% Coalition, the city is involved in. So quick recap on the 30% Coalition. This is a group of institutional investors, 90+ members, that are working together to focus on the issue of board diversity, and really primarily looking at gender diversity and racial and ethnic diversity boards, even though there has been work looking at LGBTQ diversity, disability status, veteran status. So the primary focus has been on gender and race and ethnicity. And so we, Siegel Markle Advisors, we are both a member of the coalition and we serve as a consultant to the 30% Coalition, helping them with strategy and executing some of their core objectives and such. And so really the front line, the vanguard initiative of the 30% Coalition is a campaign called Adopt a Company campaign. It's where they will actually engage with companies that have laggard board diversity and ask that they adopt certain practices to enhance their board diversity. This was first launched in 2012. Now this has helped influence more than 500 companies to appoint a woman to their boards. And there has been a new campaign just launched in October that includes another 57 companies. Again, these are companies that have laggard numbers and are being asked to adopt certain best practices to improve. So there's a lot of active work going on in this space.
Can I ask a question? Okay, so do you see any changes in terms of, because, okay, I'm looking at it from the benefit space, unfortunately. But what we see is we've been having utilization meetings with some of our providers, and one of the things that's coming up is that companies are saying they're no longer going to adopt diversity, equity, and inclusion policies and procedures, and so they are bowing out. So I'm wondering, are you seeing this? Are you hearing about it in terms of companies saying this isn't something, we want to do any longer? Because that's seemingly the trend that's happening in the US.
I mean, I think there's more, sorry, go ahead.
No, I was just gonna follow up on that. I mean, with the, obviously the students prepared admissions case, it's gonna probably have an impact on lots and lots of things. So how's that sort of being impacted? How is that impacting things,
We're definitely hearing a lot about, companies' potential reticent to adopt sort of new policies when it comes to hiring, if it comes to community engagement efforts and such. It's a very interesting time to see how corporations are reacting to this. In the board diversity space, there is a spectrum, I'd say, of how companies are reacting to this. I would overall say that companies are still maintaining the course, and a lot of them recognize that board diversity is good for business and that this is something they need to continue to pursue. I do think it is interesting. There might be some companies that might be backing off a little bit. But I think a lot of the companies that we interact with, I'm curious of your thoughts, Maureen, still recognize that this is a core good governance practice. Having a diverse group, there's a lot of research that shows that diverse groups make better decisions, essentially. And so I think companies still recognize that. There are some that push back a little bit when a group like the 30% Coalition asks them to adopt certain policies or to just even to disclose their diversity. But I do think there's a positive trend. This might be my optimistic sense of, I think a lot of companies recognize they should be doing this and take the advice from groups like 30% Coalition in a positive manner. But you still get a percentage of companies that resist a little bit. And I do think companies are trying to navigate what is a tense, maybe political environment right now. So my quick thoughts.
Yeah, I agree. I think we're seeing changes in the advertising of these programs, but it doesn't seem like there's, at least with the companies we're engaging, there's not a shying away from doing work. And one company I'm thinking of, have had a lot of questions about whether they'll be exposing themselves to a lawsuit. So that was part of the conversation, but still went ahead and is disclosing data on the website. So the NASDAQ rule also requires, if you're a listed company under NASDAQ, you have to report on your board composition. So those companies listed there, that's a good thing. Gotta keep at it, but it's definitely
A space to watch, I guess.
Yeah.
Well, and on that, like, I know a lot of trustees of other public funds is really pushing the, and pushing to educate their trustees and their board on how to approach the firms that are pushing back from it. So it is still a hot topic out there for some trustees and board.
I mean, the good news is among ESG issues, diversity is a very easy one to defend, and because there's so much research showing that it has financial impacts. Some of the other ESG issues don't have as much. So they're just important. All right, moving on to the next slide, page 8. So in 2023, your fund filed proposals at Teva, Rite Aid, Red Rocks Resort, and Equifax. At Teva, this came out of our work on opioids that we did for a number of years. And we asked the company to not exclude the impact of legal costs on executive pay. They're using EPS to drive incentive plans for the CEO, but excluding the impact of litigation. So it's not a pure EPS measure. So the company did agree to explain, if they were going to take an exception, to explain why and to explain it in the proxy statement. So that was a victory. Rite Aid was also a victory. The company didn't agree to do that same step that Teva did. So it went to a vote and 53% of shareholders supported it.
Short-lived win.
Yeah. Red Rocks Resort is a company that is owned by a family with, predominantly owns, it's a dual class company. So this is one of the laggards on diversity, and we asked them to adopt a policy where they interview women and people of color for any open board seat. They were unwilling to do that, and so that went to a vote. It got only 6%, which is actually a strong vote at this company because of the insider ownership. But a good indicator that it's sort of the outlier companies that are dual class that we're getting to now, which means the bigger companies already have this policy. So good progress there. Equifax, we filed on conducting a racial equity audit. The credit rating agencies have gotten a lot of criticism for racial discrimination in lending policy. And so we asked them to do this audit. We had good conversations, but they were unwilling to undertake the audit. And so it went to the vote, got 31% support at the shareholder meeting. If we flip to the next
What
slide.
that entail? What that is?
Yeah, so it's a big ask because essentially the company hires a third party, which is typically a law firm. And they look at employees, stakeholder groups, community impacts. And then they issue a public report showing any disparate impacts. And then the companies decide how they're going to improve it. It's different for every company. There are a number of companies that have done this, including like BlackRock, Starbucks, Airbnb. Airbnb, in their racial equity audit, what they discovered is that profile pictures, if it was a person of color, they would not get selected to rent as much as if the profile picture was of a white customer. And so Airbnb's response to that was to minimize the picture and to maximize the score that consumers get from renting more often. So if the score was bigger on the page. So that's an example of something that seems innocuous, but you wouldn't, it's not like Airbnb was intentionally trying to create these impacts, but in assessing it, they can see that how they were presenting information is an impact. So that's one example of that. Equifax, so while they didn't do the audit, we did have a recent call with them and they are making some efforts to try to address the problem. So what they announced to us is that now they have a dedicated webpage on financial inclusion that has a lot of educational resources for consumers. They do a monthly US consumer credit accuracy measure. So if you have a complaint on your credit score and they address it or don't address it, they're measuring that, posting that metric. Also, they made their consumer-facing communications more readable, and they're looking at using non-traditional data in their assessment. So in addition to mortgage payments, looking at rental payments, looking at utility bills, other forms to prove creditworthiness. Also in 2024, we filed a proposal at Globestar on that inclusive board search, and that company did agree to adopt that policy. So, but
Okay, let's go back to Equifax.
yeah.
One of the things, I'm gonna let them over.
Yeah.
Okay, so one of the things that I was thinking about is changing the terms and conditions and policies and procedures. So is that what you're saying they're looking at? And not only that, but training of the individuals who work for Equifax. Because it's, you have policies and procedures, but if people aren't trained and held to a standard, then they'll figure out how to navigate around. And so it's about some level of accountability. Once you put the programs in place, how do you measure the success or lack of success? You know, those are the things that I'm thinking of.
Yeah, so in their Equifax's defense for looking at information like rental payments is that it's hard for them to get the data. Mortgage payments is easier to get, but because of privacy issues, that landlords don't want to share information about payments from their renters. So our conversation with them was listening to them describe the challenges of using this data, but it does seem like they're trying to work on it. So we'll keep talking to them. We'll keep coming here and reporting back on it. And we may refile that equity audit proposal too. We'll
Okay,
figure that out.
all right, so, I mean, they're a big provider, and we can't let them off the hook. I don't know, maybe there's some other creative, friends will have laughing, but maybe there's some other creative, no, I'm not in this field, but other creative ways to evaluate credit worthiness. Because if they look, I think statistically, how many people of color are homeowners? How many have mortgage? Is it realistic to have that as one of the benchmarks in terms of credit worthiness?
Okay, so now we will move on to an update on requests and votes.
Great, so yeah, we're at slide 11, which first just gives high level overview. We're gonna get into the particulars of kind of what constitutes these votes. 40% against management and 60% in favor. So for, the city, you guys voted in 2023 at 6,300 plus company meetings, and that included over 71,000 proposals. So let's break those down by moving to the next slide, which talks about votes on board directors. And so there were 15,000 plus board director votes in 2023. The breakdown here, 52% in favor, 48% against. So to break down that 48%, why were there votes against management's appointed board directors? Independence is a large issue. We have a standard of, we're looking for boards that have at least 67% independent members. Independent board directors is shown to be kind of the best governance practice, right? Folks that don't have those close ties to the company and have that level of separation without a conflict of interest or some kind of history that could be dubious, essentially. So when we're thinking about independence, we're looking for folks that don't have family connections to the company or past business relationships or current business relationships. Looking at tenure, if folks have been on the board for 10 plus years, over 10 years, then we consider them non-independent, given they have been with the firm for so long. So we're looking at all those things kind of built up together. That's a big thing that gives us the votes against a large portion of directors. We look at attendance. If board directors are not attending company meetings or board meetings, then that can trigger a vote against. We look at underperformance. So if these firms have been underperforming over a 5-year period, that can trigger a no vote against board directors. We look at board diversity. If companies have a lack of board diversity, that can also trigger no votes. So all those things kind of put together equate to that 48%. There's some other criteria, but those are the main.
We communicate the reasons for the no vote to the corporation.
Not in a schematic, I would say. It's interesting, if there's an engagement, like with Equifax or some of these other particular companies, I think then there's often an individualized conversation about specific votes and such and why that happened. Because that can obviously be very valuable for the company to get that feedback and such. But that's not been done systematically. I mean, obviously there's a large number of companies, 6,000 plus companies that are being voted. So it would be an undertaking of sorts, but that it could be, I've seen other organizations, and I think, large asset managers, I'm thinking of in particular, will communicate to like their 500 biggest holding, their votes, essentially.
And also your proxy voting policy is posted online, and the company, if they get a weak vote and they're curious about what's driving that weak vote, their investor relations would look at different policy and they could figure it out. They could see if there's a 2/3 standard by most of their investors and they don't have the 2/3 independence, they know that's the reason.
Or is a block other shareholders.
The 2/3 independent standard is a really common one. The Council of Institutional Investors has that standard too, so.
But what I'm saying is we're voting as a block, we're not set independent, but we're public funds, they all set as a block of things.
No, I mean, your votes are passed under your policy, so every public fund would have its own policy, but a lot of funds come to common ground based on best practice.
But we don't coordinate.
No, you don't coordinate, no.
And do you ever get then follow-up from companies, hey, we looked at policies, this is why you voted against? Do we have a sense that they really do know why we're voting, when you vote?
I mean, the answer is that they mostly look at the top holders and they know their votes. So the top holders for most US public companies are State Street, Vanguard, BlackRock. They typically own about 15% of US publicly traded companies. So they wouldn't, I've never gotten a call saying, you know, we know you work with the city of Philadelphia, why did they vote this way? But when we engage with them, as Max was saying, in those cases, they would ask. They would investigate.
So I would say if there was a trend, say if they saw a trend maybe, would that be the reason why that they would reach out to try to understand why individual companies voted in the way in which they did? Sounds like they would be only interested in a trend, and since we're not, to your point, a top investor, they didn't care. I mean, I don't want to say they don't care, but we have no. Right, right. We have no impact. Maybe that's a better way of saying it. I had a question about it. I thought that was interesting how you said, length of service on the board. That's interesting. What did you say? You said over 10 years. Is the average, what is the average tenure on most of these boards? Because I think that's an interesting question as well.
You're an independent.
I know. Right along this, right.
Which is fine, as long as you have new, you know, on a corporate board. It's not that you can't
Right.
have long tenured people, it's just that if, you know, half of the board is long tenured, then it's.
Watch you contribute. Okay, all right.
Good questions. I guess I'll move on unless there's any other feedback on that. I like to go back and forth. Don't want to take up too much time, but also we're conscious of that. On the next slide, 13 talks about auditor votes. So we generally, support the auditors that are put forward by companies. So 84% in the last year. Where we will vote against is if we see that potential conflict of interest. And this really relates to whether if the auditor also is providing consulting services for the company. And if that amount of consulting services represents more than 20% of the total money that the firm is getting, then we vote against. There could be the opposite potential conflict of interest there. If their business, they're auditing on one hand, but they have all these other business lines, so they want to maintain everything. So that's been kind of identified as a practice to be wary of. Moving on then to the next slide, number 14, on executive compensation votes. Here, we are supporting about 60%, opposing a little over 40%, largely because of issues related to kind of pay for performance alignment. Essentially, if companies are underperforming, but overpaying, and we're looking at peers generally to see. And so that's where votes are typically cast against, is if the company's performance, the financial performance is low and we see their pay being higher than we have various other criteria we look at. For example, we want to see equity retention. We want, the executive officers to have a long-term stake in the companies we work in. And we look at things like the ratio of CEO pay to worker pay as well. So there's a few other kind of factors that are brought into this calculation.
Is this the same thing where they probably, we'll see where we voted, but we don't know why we did it, or is there more indication?
It's interesting, in my experience, I think a lot of companies will have astute corporate secretaries or investor relations teams, and that do a good amount of engagement and dialogue with their investors, and they start to learn if there are votes against, why that is. Now, a lot of these practices, like on the auditor rate of 20%, the independence rate, are kind of known, established practices now that are institutionalized in voting policies globally. I think a lot of companies, like on executive comp, if they're going to vote against, they start to understand why. You might get some companies that are a little more strong-headed and will say we maybe are not as interested in the feedback of our investors. Dual-class companies have less of an incentive, essentially, at times, maybe to listen to their independent shareholders. So there's probably a mix I think a lot of the companies end up getting a sense of why they're voted against, especially if it's over a certain threshold. People start asking questions. And don't put it wrong. Great. Maureen.
So moving on to page 15, the votes that Matt just went over are the vast majority of votes that are put on the ballot by the company. Shareholders, including your fund, also puts items on the ballot to be voted at the annual shareholder meeting. With these, we look at them case by case. Some of them we support because we think it's a good practice. So for example, we voted 77 proposals to require an independent board chair. We think that's always a good idea, so we're always going to vote in favor of that. On other issues, they're more nuanced. So the votes against are detailed on slide 16. I won't go through all of these, lose your attention, but I'll just point out a few. On the bottom of the right column, there's a no fossil fuel financing. There were proposals going into lending institutions, asking that those institutions do not enter any deals with companies that were using fossil fuels. So in that case, we voted against those proposals because we think that's going too far. Decarbonization is happening, we understand, and we support disclosure and tracking of emissions. But on strategic business decisions, we want to be careful not to hem in these companies before it's time. Just another example is at Dollarama on human rights. There was a proposal asking for reporting on emissions and gender targets. And the way that the proposal was written was it wasn't clear how the company could be responsive to that proposal. So that's another case where we voted against. So we look at these in pretty specific detail. Moving on to the last section, which is proxy policy recommendations. We have 2 recommendations for you on additions to the proxy voting policy. And then one that doesn't require change to policy, but it's just how we're interpreting diversity. So on slide 18, we're recommending you add this section on climate related disclosures and risk management. And this is essentially just to capture how we're already voting, which is if a shareholder proposal is asking for the company to set targets, to track progress, to report out on how they're handling climate risk, those are all issues that we support. As Max was saying earlier, companies are anticipating that they're going to have to do this under SEC regulations. They already have to do it under California regulations and in the EU, and they've been voluntarily disclosing information of that. So we encourage that. But we have this last sentence saying votes may be cast against proposals that ask for significant strategic changes or otherwise overly prescriptive. And that's just to give you room to vote against if the proposal does go sort of beyond that disclosure and good practice. The other policy language that we're recommending that you add is on biodiversity disclosure. That's a newer area of shareholder advocacy. We haven't seen many proposals on biodiversity, but we know they're coming. It's a concern of investors. And so our tack there would be similar, where we would like to see companies reporting out on the risks that biodiversity poses to their business and how they're responding to that. Max will walk them through the next slide, slide 20.
Yeah, to reiterate, this is a recommended interpretation as opposed to a policy change that we considering adopting. But the interpretation, so we're basically kind of upping the threshold where we would then have a no vote against the nominating committee members of the board of directors. And so this year, we recommend so the current threshold on gender is that at least 2 women on the board. We are recommending increasing that to 30%, which aligns with what we see as established best practice right now and kind of a trend in the space. 30% coalition being kind of one of the leading groups. I think that's establishing these practices and such. So raising from 2 to 30%. And on racial diversity, looking for at least 1 person of color on boards of directors. And so we will vote against nominating committees if you have less than 30%. if you don't have at least one person of color, or if you do not disclose your board diversity also. There's some folks that do not disclose. We want that disclosure so there can be information. We think that particular transparency practice. And so if you don't disclose racial diversity, that can trigger a no vote as well. That's the interpretation that we're looking at.
The one person, is that a change from existing policy? What's the existing
The
policy?
existing policy is simply they do not disclose that racial diversity piece. So, yeah, this is enough to actually saying we are looking for at least one individual now. And it's been interesting as we've been kind of following the space and what a lot of institutional investors have been doing. I think there's a lot of trends where these thresholds are increasing. And so we're monitoring kind of those practices and such. So yeah, there's kind of incremental progress.
Also, there's no required reporting on race. So for gender, it's fairly obvious and you have the numbers, but on race, companies are not required to report. So if they're NASDAQ company, now they have to report, but if they're not listed on NASDAQ, it's a voluntary standard. So we just didn't have data to be able to vote along racial lines.
We have been seeing a lot more companies disclosing in the last few years.
Yeah, and one thing I want to also make clear is we are not, I just said voting against along racial lines, but we don't actually vote based on race. If the board lacks diversity, then we vote against the nominating committee of the board because those are the individuals that recruit members. So regardless of whether those are people of color or women, if they're on that committee and the board isn't diverse, we're voting against them.
I mean, as you know, we're charging 30% coverage, and we want to early public funds to join that. As you know. What is the current percentage of women employees? In general, do we know that?
Yeah, I was looking at this recently. It's around 30%, actually. I think it was around 29%.
So that's what I'm going to say. Get the title of the company, whatever. Yeah, it seems off. I mean, just look at this board. I mean, and look at the workforce. 30% seems like a long number. I think if we're going to fresher, it should be closer to 50% plus.
I completely agree with you. I want the vote standard to be 50% on women because women make up more than half of the working population. So I think 50 is actually a compromise. But we don't want to do wide swings and we're trying to keep up with the market. Women, that percentage of 30% has been incremental over time. So that's sort of where we're landed, but I think we'll be back here next year saying 40% and then 50%.
Just keep it around. So we're at 30%.
Yeah.
We're having those same conversations. 30% coalition is having these conversations, given the name and such, right? That's all, yeah. Questions?
Well, if I could speak for a second.
Yeah.
I think a couple of things are important as a board here. And we kind of skimmed over page 4, slide 4. The only thing we really mentioned is the public plan and ERISA. We understand, but the Department of Labor rule says that our proxies need to support the economic interest of our members, right? That's the Department of Labor rule in a nutshell. And it's critical that we do that because in the end, the job of this board is to make money for the fund, right? That's it. That's where it starts. That's where it ends. Everything else is important. We have a lot of weight being the fund the size we are. I get that. We should use that. But we should be careful. And I'll use an example. So this board does not apply the 30% rule, but I know of. We built this board based on members choose some of it. So this board is very functional. It's great. It works very well. I think it's the best in the city. This fund really good. I think we should maybe go to a subcommittee and discuss it. Or we just put our hands up because what I don't want to do is continue going down a path that may box us in. As you mentioned already, I think you're right, right? Some of these
the votes are too restrictive, so you don't want to box a company in, right? Is that fair? I don't want to box us in, because on the flip side, there's people that try to pressure us to make decisions that we don't want to make, because it limits our ability to produce for the fund. So I decided I'd like to discuss this a little further before we just go on it. That's all.
No, that, clear, you go back.
Yeah, I'm okay going to subcommittee because I think the trustees need to know how we got to where we got to. So this always wasn't a great function and no reflection on anybody right here. But we didn't always even comply with diversity on this board. So we had to, the reason why we had a proxy vote to be because our firm was taking our vote for granted and voted not in our interest. So because we could not, we didn't have the time to put into reading all these proxies. It was me, Harvey, and somebody else that was on the team decided to hire a proxy voting company to manage and look after our best interest. So I totally agree that we need to go into a subcommittee and get education for the trustee to see how we got to where we got it. Because that's the reason why we wanted 30%. And that's the reason why we became members of CC, the Constitution of Investment as well, because companies was not doing what they were supposed to do for us. So, I agree.
It ties in when we were talking about education, it's a relatively new, it all just makes sense to slow down, talk, come back again. That's all.
That works, but we will set this up meeting. We come back.
I just want to say that, before they became Siegel Marco was our proxy vote company, and they had always looked at our best interest in giving us with this, recommendation. And we had said, I'm really proud that, Maureen and her companies can work with us. Thank you for that.
Thank you. Happy to be here. So, and if you want, research or feedback, any materials we can provide to you for that something.
Yeah, let's hear staff on that, but thank you. That's right.
And do we have volunteers for truck meeting?
Oh, I volunteer.
I guess I'm in.
Yeah, all right. So it's Brian, Paul, Martha.
Yes, I volunteer.
Yeah, I don't think we can have these trustees.
Yeah.
Right.
Usually the controllers.
Oh, right.
The controller, yes.
Oh, so shall I not be on?
No, you
No.
can be one. It's the trust.
Oh,
Brian, it's done.
Right. Brian Paul.
Let's take one step back. No, I
So who is gonna be Brian, the controller, and Marshall? Let's say.
Paul.
No,
Paul.
All right, that's all. Okay, Chris.
Let me get you good.
All right, Paul, you're in.
You done?
Thank you very much.
All right, thank you for having me.
guys.
Oh, did we answer the question, the political question? Where is, Chris,
Chris?
the question that I posed at our, did we discuss that?
No,
Okay,
Maureen, did you want to comment on
the question that I posed at the,
Sure, yeah, so, there have been, advocacy efforts to get companies to disclose their political spending. So that continues. In the last 3 years, you voted in favor of disclosure of those proposals. So in 2023, you voted for 36 companies, and the prior 2 years was 46. So corporate political spending continues. The vast majority of that spending is like 2/3 of it is done through trade associations. So it's the Chamber of Commerce and other business groups that receive money and then do a lot of lobbying with those funds, and there's no disclosure on that. So these proposals ask for companies to put their political spending on their website, but it goes beyond what's already in the public domain from state websites to say, how much are you giving to trade associations that is then used for political spending. So of the S&P 500, there's different, so there's trade associations, 527 groups, 504 groups, ballot measures, donations to candidates, donations to committees. So there's a lot of different ways you can spend, and roughly between like 250 and 300 of the S&P 500 are doing disclosure along those lines. So it's been a successful effort, but there's more to be done. And we can certainly look at that as an issue if the board is interested in pursuing that effort.
Yes.
Yes,
Yeah, okay.
I can't speak for everybody on the board, but I'm interested.
Marcia, just to add to that, Josh, you just give a quick review of the four wishes of Act 44, which subject to, this is added.
I want to make sure that I get this right. If it's okay, I'm going to actually send an email around that describing all of that. I don't want to get that wrong. But there are definite prohibitions in there about, or disclosures that are required so that under Act 44, so that some of this is covered, but obviously we want to be more expansive than that, but approximately. But I will look for an email later
That's the
today.
companies we do business.
Yes.
But just follow issues obviously Act 44.
Okay, all right, yes, okay, that's good.
Good question.
Yes. Not really interesting.
Yeah. Yeah, thank you.
Okay, all right, thank you, everybody.
All right, thank you.
We've been item 3. Expires. Whenever you're ready.
So in terms of the planned returns, for the bond report today, positive, monthly fund in line with expenditure of the 2.6%. Puts us up on fiscal year to date basis as of the close of May, 7.7%. About 50 basis points ahead of the benchmark. It was received, updated, numbers through June 25th earlier this week. Market continued to have a strong month. That has us around 2.73%. That's
The more days.
tracking really tightly to the benchmark. And that's also something, if you look back, you can see this, board started making some pretty significant changes around 7 or 8 years ago, 2016, 2017. What you can see is there's like a continued narrowing of the spread during the time periods.
The goals.
Correct. Two things that we are, looking at as we close this fiscal year on Friday, go into the next one. A lot of data that's been coming out, more coming out tomorrow. Personal consumption, expenditure, inflation, the PCE numbers are coming out tomorrow.
Too bad. I don't have much.
Or Saturday. That's right. That's kind of the Fed's preferred gauge. So folks will be paying attention to that. There's obviously increasing news around the presidential election, including the first meetings tonight.
That's not
Really a lot of continued geopolitical tension and issues in the Middle East. China and the Philippines have gotten into some skirmishes, which is a potential flashpoint, obviously Russia and Ukraine. And then, in addition to our own elections in November, folks have been paying close attention to the French elections. The polls right now, at least as of this morning, we have the far right slightly ahead, the far left only a couple points behind, and then the centrist party is fairly pretty significantly better.
So rolling election might not be the best choice.
Yeah, and that's not only, an issue, social things, but there's also a lot of concern that both the two extremes are going to put France further into debt, which would call their position into significant question, which would benefit from desire of the EU. Just a couple other things, jobless claims came in today below estimates. First quarter GDP estimates have been updated a third time. They're still pretty lackluster, 1.4%. Durable good orders have been pretty lackluster the past couple of months, 0.1% up in May. Revised down to 0.2 April. And then housing continues to be a real concern, reaching a record high prices, not just for buyers, but for renters. The last thing we talked about this with a couple of people on staff and the planning, I talked about it a little bit. There's all been this weird divergence. We use the wrong word, but the S&P and other broader indexes have been running significantly higher this year than the Dow. At least some of that has to do with just the fact that the Dow is on the third stock. It's also a price weighted index as opposed to the other ones, which are based on market cap. So swings in price have a much more outsized effect on the Dow.
They're particularly Dow stocks that are trying.
It's kind of, I mean, I'm not gonna, I mean, I can certainly send you, year to date, analysis of, there's long been criticism of the Dow too for not necessarily being really reflective of the current US economy. That it tracks something more akin to the 8% so yes, one or two stocks can have an outsized impact, and I'll send around some stats on the charts. Before I turn to Gabe, I did send notes out on the three managers that were tracking and it's closely. A couple of them, as we noted, showing some improvement in June to month to date. I had two as I did was capital group. It's the one that I think most easily seen in a recommendation in the third quarter for year sustain. I also said how we would just have later to one, but we have month to month, things really can move significantly. If you look at the reports from exactly a year ago, a lot of this in which they're really balancing pretty far. Dave, I don't know if you have comments or for those questions from
global.
It'll take long.
No, I don't understand that there is a running tally to see how quickly that gets addressed. And this opportunity to break any sort of.
We're not quickly, no.
Yeah,
Exactly.
I just want to point out the global actually on a relative basis. Well, both of those two managers are performing more closely than they have in the past. I also wanted to take that opportunity. Yeah, Chris summarized it well. This is a with almost 46% allocated to public markets, that's really drives the performance from one month to the next. And we've seen a lot of volatility driven by inflation and the outlook for interest rates. The trend is, or whenever you see inflationary pressure mount, the expectation that rates will be higher for longer. When we see inflation towards a trend in the right direction or closer to 2%, the expectation is that rates will come down. At some point, they will. We've seen healthy operating margins from those companies. We do see equity multiples that are higher on a relative basis than usual. That is cause for concern. We would expect to see some sort of pullback. And we've seen the inverted yield curve the longest in the history of inversion toward yield curves.
So that recession is coming.
That any minute down. Right. And that's not a very reliable predictor is what we've been able to. And obviously, there's some things that are on the horizon that could potentially impact volatility over the next couple of days. But that's, we're running out of time for this year, of course. Obviously, it's been a good fiscal year driven by public markets and having diversification portfolio as usual. It's been done.
Any questions?
I have one question, and this. Do you see any, the outcry of people for manufacturing and inflation and the cost going upwards with regard to greed and control, do you see any change in that? Are manufacturers taking a look at it, or is that something that, or is it going to just stay status quo and just people are just going to complain?
Yeah. I do better with yes or no questions, but I'll.
I think you could have just said yes or no.
Yes, but we get paid by the word, and so. So a couple of just sort of, and these are broader.
Yeah.
Generation.
Since you're here, I figured I'd ask the question.
Yeah, so no doubt there is an energy transition that's occurring away from fossil fuels into more sustainable and probably more reliable sources of energy. And over the short, and that will happen, but at the time period, but over the short term, that creates an imbalance between the amount of energy that's required and the amount of energy that's supplied, and that is an inflationary force. At some point, that will abate. We will create more and more efficient sources of energy, and that will help alleviate what we've relied on fossil fuels over the years. The other interesting trend, this is probably something that started before COVID, but has certainly been exacerbated since, is the trend towards nearshoring or onshoring, more manufacturing that's occurring, whether it's around our borders or in the US. And that will have some costs in terms of building new factories and training new employees. In hiring American workers. American workers are more expensive. The cost to ship goods from overseas is expensive. So I would say over the short term, those are also inflationary pressures. But what that does is create inventory that's much closer to being a consumer. And eventually that will probably abate some of the expenses.
Yes. Okay, yes. Thank you for
That was a very long way of saying.
Yes.
Yes or no?
Immediate, not immediate, but.
As you may be answered from consultants.
Person, please, because the answers get long.
Any questions from anyone else? Thanks, Dave. That takes us to agenda item 4.
Now, recorded people, so securities lending, just under $128,000 for the month. 613,646 year to date, 152.547 million since the board started the program. Uptake in local and diverse in UM, driven in part by strong amount of the equity markets. 59.17% combined, 50.71 for diverse and for 9.52 for local and certain municipalities. And lastly, the board calendars. A little bit of discussion about the August meeting. Change, let's begin the dates, sometimes the July meeting is due to the 30th. Right now, August is set for the 22nd, coming in September 26th.
Any questions?
Are we moving August 22nd?
That's up to the, I would, a couple.
I won't be around. What's August 20th? You won't be around. Yes.
Willie will be meeting.
Oh, then we got to meet. Not important. No, I'm sorry to do. No,
You're both important.
I was just doing. We're all important. No, I'm just doing, right?
So are we keeping the 22nd of August or no? That's what, August what?
22nd.
27th.
So you want to go to the 29th?
That's right.
The 15th, that would be ready.
Okay.
That's right.
I think Thursday. But we getting out, y'all getting out early?
Well, if anybody, it would be on Friday.
I know that's what the city was doing.
Want to kind of
What is it?
figure it out?
Yeah, 27th or 28th.
Okay.
Let's go a little bit. I'm sending a couple of dates. If that works.
Oh, and then, and September 26th is fine, right? It should be fine.
We'll pick one day that.
So, you know,
We'll pick one day that we can, the 26th. August, week of August 26th, we'll pick one day that.
yeah.
So good. Any new business? Old business, any food and problem taken care of, return. Call the whole board back in session. Is there a motion to adopt the action taken by the No, so we're gonna need to do that.
The only thing we did was we formulated our committee.
So I don't think we need to- that's so we're good, so. We're not taking we adjourned, we are adjourned. Thank you all very much.